Let's talk about price charts. We've mentioned it a few times, but in a very simple way, before you do your trades, before you do your analysis, and even when you actually open these trades, what you're looking at are price charts. And these price charts are going to show you the value of the current pair that you are analyzing. And that is extremely important. So, for example, what we're looking at right here, this is a price chart of euro against the Japanese yen. So as of right now, 1 euro equals 179 Japanese yen. Now, to view the price charts, what you're going to use is TradingView, which is the app that we are in right now. I'm gonna do a separate video fully going over the platform itself and how it works. It's a pretty simple platform, but it's extremely important. And it's also a platform you're gonna be using for many different things. Maybe you could be into crypto, or maybe you're looking into stocks as well. All the charting, all the price charts will all be found on this platform itself. But back to euro against the Japanese yen, the value that you can see right here is the actual price. So 1 euro is 179 yen. But what you can see here, these are not just your regular graphs that you see in school. These are shown through Japanese candles. These things right here, these rectangles that you see right here, these are called Japanese candles. And they are the most used way of looking at the actual value of the whatever pair you're currently looking at. Now, could you possibly use the line chart as well, just to view the price, the current price of whatever Forex pair? The answer is yes, of course. But the thing is, if you use lines, you're not gonna get the full picture and you don't see the actual detail of how price is actually moving. Price doesn't just go up and down in a very systemic way. It tends to make different types of movements within the actual impulse. So that's why instead of using just these line charts, we use the Japanese candles. Now, I'm gonna explain to you exactly how these candles work because it's extremely simple. So let's take this candle here, for example. Now, the reason why I know it's bearish is because I put it in my settings that all my bearish candles, so the one on the right, are purple and the bullish candles are white. So if we analyze this candle in and of itself, there's a few factors that you have to keep in mind. Now, what does this candle actually tell us? There's 4 things that you can learn from it. This is our body open. This is where the candle opened and this is where the candle closed. Then there's 2 other very important factors, wicks. Other people call them shadows. They have many different names, but what they mean is that these are the lowest and the highest point that the price reached during this candle. It means that within a 15-minute interval, price opened from here, went all the way up here, it went all the way down here, and it ended up closing all the way here at the body closure. It is extremely important that you understand the difference between these factors. One of the things that we're gonna be using a lot throughout this strategy is the body closures. Essentially, when we were looking for certain trades and certain reactions, we're gonna wait for price to close above or below certain points. So if price goes all the way down here, but it closes up here, and we were looking for a closure down here, then that's gonna tell us, hey, maybe this is not the good time to buy or to sell because you didn't get the proper body closure. Now, a bullish candle, on the other hand, is exactly the same, but in the opposite direction. So this is where the body opens at the bottom, and this is where the body closes at the top. So what does this tell us? Once again, that when the candle opened, it opened all the way here, and at the end of the 15 minutes, it closed all the way up here. Now, if it has some wicks, this simply means that within the 15-minute interval, price went all the way down here and it went all the way up here. But what truly matters is the closure, because just like I mentioned before, the body closures are very strong reactions which you're actually going to be using on a day-to-day basis. And that's why it's so important that we pay attention to that and we don't get caught up in the wicks and think, hey, maybe price is already giving us the reaction that we're looking for. Always wait for the body closure first. Now, back to the time frames, because that's one of the things that I mentioned. On TradingView, you can look at any time frame that you really want. For example, if you want to look at the 4-hour time frame, this is going to mean that every single candle equals a 4-hour interval. Same goes for the daily. It means that every single candle is 1 day. If you go to the 3 hours, to the 2 hours, to the 15, to the 1 minute, to the lower time frames, everything is exactly the same. The candles work exactly the same way, but what changes is the interval. So essentially, the charts and the price movements themselves are always the same, regardless of the time frame. But you can decide based on your trading style on how many details you actually want to see, how many details you need. For example, if you're a swing trader and you take trades that last multiple days, multiple weeks, then in that case, you're probably going to be worried more about the daily time frame. If you're a day trader, you take intraday trades, so within the same day, then the chances are you're going to be looking at the lower time frames, at smaller time frames. And if you trade our strategy, the range trading system, then you're going to be using smaller time frames such as the 4-hour and the 15 minutes. And this is one of our strong points. This is one of the things that many people don't understand about the RTS, is the power that it comes from the RTS. The reason why it's such a good strategy and it keeps working is because we don't just look for one time frame confirmations. We don't just look at what is the 4-hour doing and off of the 4-hour we take a trade. We look at what the 4-hour is doing, and then we use what the 15-minute is doing, and we combine the two time frames in a very specific ways in order to get as many details as possible before taking our trade. But we're going to talk more about this in the next videos. What I wanted to get out of this video is that you understood very simply what these candles mean and what you're actually going to use them for, because especially if you have a school background and you think about a chart, you're just thinking about a line chart going up. This is the value now, this is now it's going down. But in trading and in day trading, it's a little bit more complex, but at the same time, you're going to get used to it as long as you are kind of within this space. And the truth is, it's not nuclear science. It's just all about getting used to these new concepts, especially if you're a beginner. But that is it for this video. I will see you in the next lecture.